So this is a sum of Jan-Feb 2022, question number 6, that is related to marginal costing, and it is related to inventory valuation as per marginal costing and inventory valuation as per absorption costing. Are you with me?
Yeah.
Okay, fine. In marginal costing and absorption costing, the only difference is that marginal costing takes only variable cost into consideration. Okay, that means when you have opening inventory or you have closing inventory, the inventory as per marginal costing is valued at variable cost. And inventory as per absorption costing is valued at the total cost. When I say it is valued at total cost, that means the variable cost also and the fixed cost also. Are you with me?
Yeah.
Okay. I'm reading the question. The question says, Little Ben PLC is manufacturing watches. Are you with me?
Yes.
It has been the normal practice by the senior management to ask the accountant to value inventory using marginal costing and absorption costing. Okay, so this question is basically related to valuation of inventory. Can you tell me the difference between the valuation of inventory as per marginal costing and valuation of inventory as per absorption costing?
Uh, the raw materials, the opening and closing inventory.
In
The-
marginal costing, inventory will be valued at variable cost only.
Yeah.
In absorption costing, inventory will be valued at total cost.
Yes.
Total cost, that means variable cost plus the fixed cost. Are you with me?
Yes.
So I have some information that is available for the year ended 31st December 21. They're saying that opening inventory is 5950 units, and they have already valued the inventory as per marginal costing, as per absorption costing. As per marginal costing, opening inventory is valued at 160,
650.
160,650. Can you see that?
Yes.
And as per absorption costing, it is valued at 190,400. With me,
Yeah.
production for the year is 76,000 units. You have semi-variable costs 174,800, fixed element per year plus 0.65 per unit of production. It means in the semi-variable cost, the variable part is how much?
65 cents per unit.
0.65. And the fixed element is something different. Are you with me?
Yes.
Okay, fine. Fixed overheads is 19,000 per month. You have the direct material cost, that is 12.10. You have direct labor costs. To make one unit, it will take you 1 hour 45 minutes at a wage rate of 8.40 per hour. So can you give me the direct labor per unit?
Direct labor per unit. 8.4.
Wage rate is 8.40
Yeah.
for 60 minutes, right?
Yeah.
So you have how many minutes?
1 hour 45 minutes. So
That
it'll
means
be
60 plus
8,
45. So for 105 minutes, what will be the wage rate?
19.6.
105 into 8.4 divided by 60. So per unit it will be 14.70. Are you with me?
Could you repeat that, miss?
For 60 minutes, labor is paid 8.40.
Yes.
For 105 minutes, which I am going to use to make 1 unit, how much will my labor be paid? Cross
The,
multiply 8.4 into 105 divided by 60. Are you with me?
yeah, it'll give you 14.5.
It will give you
14.
14.5. With me?
Yes. Miss,
Oh,
you have written 14.7.
sorry, 14.7. My calculator shows me 14.7. I don't know if you got some calculator by paying half price, you will get some other answer.
Let me check again. 3.4. No, 14.7, yeah.
Okay, 14.7. With me,
Yes.
your sales is 76,830, selling price is 52. Inventory is valued using the FIFO method. That means the inventory that comes in first is sold out first. When I
Yes.
say inventory that comes in first is sold out first, that means your opening inventory will be sold first.
Yeah.
With me, right?
Yes.
Now
It'll
they
become
want, yeah,
the sales, like, revenue would be 3.9 million.
revenue is 52, see?
How? No, that is selling price per
So
unit.
revenue is unit into selling price.
Yeah, that will give you like 3.995 something.
That we will see later. First, I need to see what is the question that is asked. So they want a statement of profit or loss, another comprehensive income, and they want inventory valuation showing marginal costing and absorption costing. Are you with me?
Yes.
Okay, fine. No problem. What I will do is I will put this over here. What do they want from you? A statement of,
Profit, comprehensive income.
yeah, comprehensive income using marginal costing and absorption costing. You are with me, right?
Yes.
Okay, fine. The first thing that you would do is what?
Yes, you will first do the marginal together, like the revenue.
I want in columnar form. That means my one column would be for marginal costing, one column would be for absorption costing. Are you with me?
Yes.
Okay, fine. Now, when I'm talking about revenue, how will you get the revenue?
You multiply the selling price with the sale.
26,830, 76,830 multiplied by 52.
52. It gives you 3.995160.
3,995,116. Yes,
Yes.
sales minus your variable cost. Your variable cost would be your direct material costs, direct labor costs, okay? Your semi-variable costs and fixed overheads, or I could say sales minus the cost of sales. Cost of sales includes opening inventory plus the costs minus the closing. Are you with me?
Yes.
Okay, fine. Come on, let's see.
Wait, no, so in marginal, how is the fixed overheads involved?
We will come to it. Okay,
Okay.
come
Okay.
on. Direct material costs. What is the direct material cost?
Direct material cost is the 12.1 per unit
Into
into 76,830.
Why 76,830?
Means that's because that's the amount of sales they have had.
What have you produced?
What?
What have you produced?
Watch.
Cost of sales is opening inventory plus production minus closing inventory. Are you with me?
Yeah.
Okay, fine. So what is your opening inventory? Opening inventory would be they've already given you that is 160, 650. Are you with me?
166.50. Yes.
Yeah. Now we are talking about the production. Sales minus the cost of sales will give me the profit, right?
Yeah.
Cost of sales is opening inventory plus the production. Do you want me to prepare it together? Not follow this?
Yeah, miss, that'd be better.
Yeah, no problem. Right. So we are doing columnar form of marginal costing and absorption costing. So you will
Yeah.
first have your sales, right?
Yeah.
Sales is how many units?
76,830.
Okay, minus cost of sales. Cost of sales opening inventory is how many units?
One
5950.
opening inventory. Yeah. Opening inventory is 5950.
And production is 76,000 units. Are you with
Yes.
me?
Yes.
Production is 76,000 units. And what else is said? Inventory valuation, only the inventory valuation they want using marginal and absorption. That means when you're valuing inventory, opening and closing inventory, that you will do separate valuation as per marginal and absorption. They want you to prepare a statement of profit or loss and other comprehensive income. Are you with me?
Yes, miss.
Okay, fine. Now I've already done opening inventory and I've written it as per marginal and absorption.
Yes.
Now I will do my production. What I will do?
Production.
Production cost. Production cost will remain the same whether it is marginal costing or absorption costing.
You're asking me that?
I am telling you that.
Okay.
Only the valuation of inventory would change in marginal and absorption.
The rest everything is same.
The production cost would remain the same. So let's take the production cost. The first production cost would be the direct material cost. How many units have you produced?
Produced 76,000.
So direct material cost would be for 76,000 units multiplied by 12.10.
76,000. 12.10. 919,600,000.
900,000, 19,600.
919,600, yes.
Direct labor. We
Yeah.
calculated direct labor per unit would be 14.7. So 76,000 into 14.7. 1,117,200. With me?
Yes.
Now the semi-variable cost. In the semi-variable cost, the fixed element is 174,800 and the variable element is
Zero point six
0.65
five.
into 76,000.
So you put 0.65 times 76,000.
0.65 times 76,000. So
49,400.
49,400
Yep.
plus 174,800. So the total
224.
semi-variable cost would become
Two
224,200. Yeah.
224,200. Yes.
Now your fixed overheads. It is 19,000 pound per month.
That does not change. Yeah.
So how much would your fixed overheads be?
19,000
Read properly.
per month. Okay, 19,000 times. What month is it?
12
Okay, so
months, right?
12. Yeah, 12 months times 12. 228.
So your total production cost will become how much? It will become 2,489,000. Are you
What?
with
2
me?
million?
Yeah.
Miss how miss? They bought 200,000 value. Oh, okay, wait, okay.
Calculate,
Calculating
calculate.
direct material and direct labor. Yeah, my bad.
Okay.
Hmm.
So opening inventory, production cost. Production cost would remain the same. 2,489,000. Are you with me?
Yeah.
Minus the closing inventory.
You show this in the paper as well.
Yeah. Closing inventory is how many units, darling?
Closing
You had
inventory.
opening inventory of 5,950 units.
Miss, you subtracted with the
Produce
month.
76,000 units.
Yeah.
So total would be 5,950 plus 76,000 minus 76,830. So this minus 76,830, this is the units that you have sold. This was the number of units that you had.
Yeah, 81,950 is the total units. You subtract your 76,830. That gives you 5,120.
Zero is your closing inventory. Are you with me? Are you with me?
Yes, sir. Yes, ma'am.
Okay. So your closing inventory is 5,120. In marginal costing, you are going to value your closing inventory using what cost? In marginal costing, you are going to value your inventory using what cost?
Which manager
Variable cost. Marginal costing takes variable cost into consideration. Absorption costing takes total cost into consideration. Are you with me?
Yeah.
Are you sure?
Yeah, but miss, you don't get the inventory in marginal, right?
We assume inventory produced is inventory sold. But here,
Okay.
this is not the case. They want us to prepare a statement of profit or loss and other comprehensive income. Okay, that means
Hmm.
sales minus cost of sales is profit. But while doing so, they want us to value inventory. Here, while doing so, they want the inventory valuation to happen as per marginal costing and they want the inventory valuation to happen as per absorption cost. Just digest this fact. Are you with me?
Yeah, miss.
In marginal costing, inventory will be valued using what cost?
Variable cost
In
and absorption.
absorption costing, inventory will be valued using what cost?
Total cost.
Total cost, that means a variable cost plus the fixed cost.
Yes.
Also, they have told us that inventory is valued using what?
First and first start.
That means the inventory that is there from the beginning will be sold first.
Yeah.
That means closing inventory will be for the current year production. That means closing inventory will be from the current
But the
year's
numbers,
production. Are you with me?
yeah, but then, yeah, miss, but the numbers won't change, right? Either ways.
Which numbers? The costs.
No, the inventory numbers in general.
The inventory number will not change. The closing inventory will remain 5120.
Yeah.
But the cost will change. With me?
Yeah.
Okay, let's talk about inventory valuation as per absorption costing. Absorption costing takes what cost into consideration?
What, miss?
Absorption costing takes what cost into consideration?
Total cost.
Okay. So can you give me the valuation of closing inventory as per absorption costing?
Valuation of closing inventory as per absorption. I mean, you add in the fixed cost together with it. That would be
Your production cost, including the variable and fixed costs, is for total 76,000 units is how much?
2,489,000.
Yes, this is your total cost, right?
Yeah.
That means this is your variable cost plus the fixed cost.
I keep getting confused between marginal absorption, miss.
So that is why I'm telling you again and again. Now, in marginal
Yeah.
costing, you value inventory at
Yes.
what cost?
Variable.
In absorption costing, you value inventory at what cost?
Total cost.
Total cost means what?
Both variable and fixed.
Is this the total cost to produce 76,000 units?
Yes.
Okay. 2,489,000 is the total cost to produce how many units?
76,000.
So can you give me the valuation of 5120 units of your closing inventory?
Yeah, I just have to divide them.
Yeah. 2,489,000 divided by 5120. No, divided by
Two.
76,000, right?
That becomes per unit.
Yeah, 32.75 is per unit. So for 5120 units, it will become how much?
5120. Wait, sorry, I put wrong. 5120 divided by 76. 0.067.
Oh my God. Per unit is 32,700. So 5120 will be
What?
0 point.
Oh, I didn't see the 32. Wait.
167,680.
167. Yeah, 167,680.
How much?
167,680.
Okay, fine. Now we're calculating the cost of sales, okay?
Okay.
Cost of sales. We want to value closing inventory as per marginal costing now. Marginal costing takes what cost into consideration?
Variable.
Variable cost. Can you give me the variable cost that is over here?
Like all of them? Yeah.
Variable cost, everything that comes in variable cost, you have to give me.
Yeah, so it's the 919,
Now you will
919,000.
give me, and this is for 76,000 units. I want to calculate closing inventory. Closing inventory is 5120 units. So if you
20.
have per unit available, you can give per unit, right?
Yeah.
Okay, give me the variable cost.
12.1. 61,952.
Give me per unit variable fast.
Okay, okay, sorry.
What is the direct material per unit?
12.1.
What is the direct labor per unit?
14.7.
What is the semi-variable cost per unit?
0.65.
So is this the only variable cost that is available with you?
Yeah,
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 sure.
yeah. These three, and then the fixed cost is the rent.
In marginal costing, you will value inventory at what cost?
Variable cost.
So why you want the fixed element?
Yeah, I'm saying there's no need to add that.
Yeah. In marginal costing, you will value inventory at what cost?
Variable.
Can you give me the variable cost, please?
Oh, you want me to? Oh, okay, total variable cost.
Can you give me the variable cost?
It's
Direct material,
27.45.
direct labor, semi-variable cost. These are the three variable costs that is there on your screen. Do you have eyes to see the screen?
I have. This is 27.45.
So it is 12.10 plus
14.7 plus
14.70
0.65.
plus 0.65. What is the total of this?
27.45.
Are you sure?
Yes. I'll recalculate it as well.
What is the
14
closing inventory?
5152.
So 27.
5120.
27.45 is the variable cost, and I am going to value my inventory only at the variable cost. So my closing
14544.
inventory will become how much?
14544.
145.44. So you have opening inventory plus the production minus the closing inventory. And please note, you are doing inventory valuation using different methods.
Yeah.
You are doing inventory valuation using marginal costing, only variable cost. Inventory
Mm.
valuation using absorption costing, the total cost. Are you with me?
Yeah, I got it now, miss.
Now, can you give me the cost of sales as per marginal costing and cost of sales as per absorption costing?
Okay,
As per
just
marginal costing, it will be opening inventory 160, 650 plus the production cost 2,489,000 minus the closing inventory 140,544. So it becomes how much? 25, 2 million.
no 2,509,106.
Can you give me the profit as per marginal costing?
Just subtract 25.
So revenue minus the cost of sales, the profit as
1486.
per marginal costing will be
1,486,054.
1054. Can you
Yes.
give me the profit as per absorption costing? Before that, give me cost of sales as per absorption costing. 190,400 plus 2,489,000 minus 167,680. So it is 2 million.
2511720.
Profit will become 140, 483,440.
Yeah, 1 million
With
483.
me.
Yes.
So this is the profit as per marginal costing,
Okay.
but only the inventory is valued as per marginal costing.
Yeah, only the inventory is different.
This is the profit as per absorption costing, but only the inventory is valued as per absorption costing. Please note the production cost is valued normally.
Mm.
Why you did so? Because they asked you to do so.
Yeah.
Yeah,
Yeah.
I'll proceed ahead.
Yes, miss.
Done it, you will do this some two times again. State one
Okay.
disadvantage of marginal costing.
Yes, you cannot make long-term decisions off of it.
How many marks? 2 marks.
2 marks.
I will give you one disadvantage that you will learn for yourself.
Okay.
It is not recommended by SSAP 9 and IAS 2, International Accounting Standard 2. IAS 2 is for valuation of inventory.
Mm.
They say you should value inventory at total cost. Marginal costing values inventory at variable cost. So first disadvantage of marginal costing is it is not recommended by SSAP 9 and IAS 2. You will learn this.
Yeah.
Okay?
Yeah.
It is not used for long-term decision making. It is not used for long-term decision making. And if I value my inventory using marginal costing, then my financial statements will not give me a true and fair view. Are you with me?
Yeah.
Okay, fine. Two disadvantages of absorption costing. Absorption costing disadvantages, it does not follow prudence concept. Prudence tells you that your expenses should not be overstated and your assets should not be overstated. Okay?
Yeah.
When you value inventory using absorption costing, okay, when you value your closing inventory using absorption costing, your closing inventory is current assets, right?
Yeah.
Okay. Closing inventory is valued at total cost. Yeah.
Yes.
And total cost will definitely be higher than only the variable cost.
Yes.
So your closing inventory is overstated and therefore the profit is also overstated. This is a disadvantage of absorption costing.
Wait, so if closing inventory is overstated, then how will the profit be overstated, miss?
Because closing inventory is treated as income, you reduce your expenses. If you see
Yeah.
your cost of sales properly, cost of sales is an expense,
Mm.
right?
Yeah.
So opening inventory plus purchases minus closing inventory. You remove your closing inventory from your cost of sales. Do you?
No, you add them, no? Yeah, you subtract them, yes.
You remove your closing inventory from your cost of sales. If you
Yes.
remove your closing inventory from the cost of sales, that means you're reducing your expense,
Hmm.
reducing your expenses. So it is treated like profits always. Are you with me?
Yes.
Okay. So one disadvantage of absorption costing you will learn is one disadvantage of absorption costing. What will you learn? It does not follow. Can you please say it?
Does not follow the prudence concept because the closing inventory may be overstated and therefore the profit will also be overstated.
Okay. Can you say in proper English which is audible and can be understood by others if they listen to you?
And I was not audible, it's okay. Wait. Does not follow the prudence concept and the closing inventory may be overstated and therefore also profit will be overstated.
Another disadvantage of absorption costing, what would it be? It is time consuming, complex to work out the
Time
closing
consuming.
inventory. Okay. Whenever you want to write disadvantage of anything, you can always write time consuming, may need expert knowledge. Are you with me?
Yes, miss.
Okay, fine. I'm giving you some time. You first finish the A and B part properly with your own understanding without help, and then I will take you to evaluation. With this question,
A new customer is considering buying 5,000 watches but is only prepared to pay £30 per unit.
okay, you have to give a decision whether you should accept the order or not. Okay,
Okay.
what is your normal selling price?
52.
And you are getting a new customer, but he wants to pay only 30.
Hmm.
You have to decide whether you should accept the order or not. When will you accept the order? If you have contribution positive, if you have a positive contribution, you should accept the order. If the
Hmm.
contribution is negative, do not accept the order.
Okay.
So your sales is how much? 30
For the 30 is
for this new
2,304.
customer
5,000. Oh, 5,000.
per unit selling price is how much?
30. And
30.
for the 5,000 is going to
Variable
be
cost
1.
is how much? 5,000. How does that even matter to you?
That gives us the revenue.
I am looking if I can sell to him or no, even if he is buying 1 unit or 2 units, whether
Okay.
can sell to him or no. Okay?
Okay, okay.
So if 1 unit will give me a loss, total units will also give me a loss now.
What?
If 1 unit would give me loss, so
Yeah.
all the remaining units would also give me loss, right?
Yeah, yeah.
So if I have a positive contribution, I can accept the order. Otherwise, I should reject the order. Are you with me?
Yes.
What is the variable cost per unit?
Was
We calculated on top the variable cost per unit
12.1 plus 14.7 plus
27.45.
27.45. Yes.
Okay, fine. So selling price per unit is how much?
30.
Variable cost per unit is
27.45.
what is a contribution per unit?
2.55.
13 minus 2.55. So even if I'm reducing the selling price, if somebody is buying 5,000 units from me, I am still getting a positive contribution which can contribute towards the recovery of fixed costs.
Hmm.
So whenever you have a question whether you should supply to this new customer or not, you will always see if the product is able to give you a positive contribution, or alternatively, I would say, if the product is able to recover the variable cost for you, you should accept the order. Selling price is 30,
Yeah.
variable cost is 27.45. The product is able to recover the variable cost, yes or no?
It is.
So the product is able to recover the variable cost for you, and he's a totally new customer. Should you accept the order or not? I'm giving you a rule.
Yeah.
If contribution is positive, accept it. If contribution is negative, reject it.
Didn't reject it. Okay.
Contribution is positive,
Yes, it is.
you should accept the order,
Yes.
but they want an evaluation, and it is for 6 marks. 6 marks, that means 1 mark for your advice. Okay?
Yeah. So
You have to give
let's.
you have to give 2 to 3 advantages and 2 to 3 disadvantages.
Yeah. So I
Okay?
can just say that I'm getting a positive contribution.
So
So I
there are
will be
points
able.
in favor of accepting the order. And points for rejecting the order. Come on, tell me points in favor.
Points of favor. The order could be accepted on the grounds that 30 is greater than the marginal cost of
You can
27.4.
say you are getting a positive contribution. Then you can show the calculation of sales minus variable cost contribution. It is contributing how much? 2.55. Since you are getting a positive contribution, you can accept the order
Yes.
because you're able to recover your variable costs.
Yes, even if it's like lower than the average, like the 50.
Darling, they are asking us a question because the selling price is lower than 50.
So we can reject it as well.
You can reject it as well. If you have a spare capacity and you have to give answers for both accepting and rejecting.
Okay, fine.
So if you have a spare capacity and you can fulfill the order, so you should accept it because at least the product is recovering the variable cost and plus it is giving you 2.55 extra per unit.
Hmm. You can
If
bear the
product
fixed
is
cost.
able to recover the variable cost, product is giving you something more to recover the fixed cost, but you should ensure that you have spare capacity to produce this 5,000 units. Also, if you remember, we have closing inventory of 5150 units, right?
Yeah, you can use that closing inventory.
Yeah, so this order can be met. There is no need for extra production. This customer can become our loyal customer in the future. If he
Yeah,
likes our product, then in the future you can also charge him an extra price. Yeah, these would
yeah,
be the points in favor of accepting the order.
yeah,
Now let's talk about points for rejecting the order. If I sell the product at 30 where my normal selling price is 52, I am only recovering variable cost, fixed element is not yet recovered.
yeah,
Okay. Existing customers will be unhappy to hear that I'm giving low price to somebody new. Yeah.
yeah.
If I am willing to give lower price to this customer, he may feel that my product is actually not of good quality. It is of inferior quality.
So the normal stuff. Okay.
Maybe our existing customers in future would ask us to even reduce the price, which would not be possible for us. Yeah.
Yeah, yeah, miss.
So the financial factors tell me you should accept the order. But there are other
Mm.
ethical and moral factors which tell me you should reject the order. So the
Miss,
margin
you
is
can also tell that since you're using marginal to calculate it, you could say that it's only good for
give
the short term.
any answer. Any
Okay.
answer is okay. Any conclusion is okay. Because
Okay.
you're giving points in favor, you're giving points for rejection, you're giving points for accepting.
Yeah. Miss, over here in the conclusion, it's written that marginal costing states order should be accepted.
Yeah,
So
because
that.
marginal costing principle tells you whenever you have to make some
Oh yeah.
unusual decisions, any unusual decisions that you have to take. If anything is giving you positive contribution, accept it.
Should accept it. Yeah.
Okay.
Yeah.
So you can accept the order. You will have to write the full answer. So this is a sum that has come in Jan Feb 2022. It was the question number 6.